All right, let's dive into a really fascinating, kind of scary theory today. We're talking about a future war, but one that might be won without firing a single shot. This whole explainer is going to dig into how a big, flashy geopolitical crisis could actually just be the perfect cover for a massive hidden shift in global financial power.
So picture this. The year is 2026, February. Tensions have just absolutely boiled over, and boom, the United States and Israel launch a series of huge strikes against Iranian nuclear and military sites. You can just imagine the news flashes lighting up every single screen on the planet.
Iran's response? It's swift and it's dramatic. They do the one thing the global economy absolutely fears the most. They blockade the Strait of Hormuz. I mean, we're talking about the narrow channel that carries a full 20% of the world's entire oil supply. It's a huge deal. And the impact? It's immediate. Global markets just go into a total panic. The price of Brent crude oil, it just skyrockets past $100 a barrel. And that sends shockwaves, through every single industry and, yeah, right down to your wallet. So, naturally, all eyes are on the military conflict, right? The missile strikes, the ships moving around. But what if that's not the real story? What if the real war is happening somewhere else entirely? While everyone's watching the US and Iran, could another major power be playing a totally different game and, actually winning?
Okay, so first, let's break down the war that everyone sees. The crisis in the Strait that's dominating all the headlines. So the timeline here is pretty straightforward. You've got a strike on February 28th. That triggers Iran to shut down the world's most critical oil choke point. And the results? Well, it's not just economic chaos. It's a massive humanitarian crisis with over 3 million people displaced. Just staggering. Okay, now let's pull back the curtain a bit. Because according to this whole analysis, the real story isn't about missiles at all. It's about money. It's not a very, very calculated, long-term strategy that's being put into play by Beijing.
So what you see here are kind of the two faces of China's strategy. Publicly, they're playing the role of the peacemaker, right? They're calling for a ceasefire, they're offering aid. But behind the scenes, this theory suggests, they see a golden opportunity. With the US totally distracted, this whole conflict provides the perfect cover to push their own financial system forward.
And the stakes here, wow, they are just enormous. China has $400 billion invested in Iran. Now, you'd think this conflict puts all of that at risk, right? But according to this analysis, the potential prize is so much bigger. We're talking about a crack in the US dollar's global dominance. And that's worth a whole lot more. So what exactly is China's secret weapon in this whole scenario? Well, it's not an aircraft carrier. It's not a stealth bomber. It's something much more fundamental. It's about changing all the world's most important commodity, oil, is actually bought and sold. And here it is, the core of the strategy. China is buying almost all of Iran's oil. We're talking 80 to 90%, and they're getting it at a deep discount. But here's the game-changing part, how they pay for it. Every single barrel is paid for in Chinese yuan, not US dollars. It completely bypasses the whole system. And in just the first few weeks of this crisis, 16.5 million barrels are traded this way. That's a huge move. And you might be asking, how is this even possible? Well, the answer is a system called CIPS. For decades, the whole global financial system has run on SWIFT. That's the payment network for the US dollar. CIPS is basically China's own version, built from the ground up to handle the yuan. You could say it was designed for exactly this kind of moment. And look, don't mistake this for some small-scale experiment. The year before this whole crisis kicked off, in 2025, CIPS had already processed a staggering 175 trillion yuan in transactions. So the network isn't just ready, it's battle-tested and it's operating at a massive scale. The pipes are already built.
Okay, so this is where it gets really interesting, where it becomes this complex strategic game. It's not just a simple conflict between two countries anymore. It's more like a global chess match, where every single nation has to figure out its next best move. So let's try to put ourselves in Washington's shoes for a minute. You are defending a system, the petrodollar, that's been in place for over 50 years. It's what makes the dollar king. And now, Iran and China have just thrown down a direct challenge. What's your move?
Well, this is what some analysts call a dominant strategy trap. Basically, every single option you have is a bad one. You use military force, I mean, you can bomb an island, but you can't bomb a currency agreement. You just accept the yuan trade? Well, that basically signals the end of your dominance. Or do you try to sanction all 40-plus nations that desperately need oil? That would just backfire and push them away even faster. There are just no good moves.
Okay, so what about everyone else? For countries like India, Japan, or South Korea, it becomes a classic prisoner's dilemma. Look, the best outcome for the group is for everyone to stick together, reject the yuan deal, and stand with the US. But if you do that and others decide to break away to get that cheap oil, well, your economy gets nothing and collapses. So what would you choose, your loyalty or your survival? And this quote here just perfectly captures the whole dynamic. This is how 52 years of dollar dominance ends. Not in a war, in 1,000 silent, self-interested decisions. It's not one big, epic battle. According to this theory, it happens piece by piece, as dozens of countries make these quiet, totally rational decisions, just to keep their lights on. So, where does all of this lead? What does the endgame actually look like for the US dollar and for the entire global economy? Well, the most likely outcome probably isn't a total, dramatic collapse of the dollar. It's more like a split. You'd see the world's energy market divide into two distinct zones. One market still priced in US dollars for Western allies, and a whole other market priced in Chinese yuan for Asia, the BRICS nations, and the global south. The dollar doesn't die, but its monopoly, that's over. And this analysis even puts some numbers on it. The base case, that the market splits and the yuan gets stronger, is given a 55% probability. The chance that things just go back to the way they were? Only 25%. So yeah, the odds really seem to suggest that change is more likely than not. So this is all fascinating, high-level stuff, right? Geopolitics, global finance. But what does it actually mean for you? How could a massive power shift like this actually hit you at home? Okay, so full disclosure, this is just an analysis of potential consequences, definitely not financial advice. But an event like this would have huge ripple effects. A de-dollarization scenario could be a major boost for things like gold, which is a traditional hedge. It could put some serious downward pressure on the US dollar index, and it could mean higher interest rates for everyone, especially if big holders like China start selling off their US Treasury bonds. And that really leaves us with the final critical question. Is this how 52 years of dollar dominance ends? Not with the loud bang of a missile strike that everyone sees on the news, but with the quiet, almost invisible hum of millions of financial transactions, one by one switching from one currency to another. It's a really powerful thought to leave you with.